What's up, everyone? I hope all of you had an awesome weekend because we're about to have a very exciting week in the market. We have some new earnings to cover. We have a lot of great setups currently in play. So in today's video, we're going to cover all that good stuff and some other very important things to be aware of in the market heading into this week. And guess what? We're not wasting any time either. So Tom, let's jump right into today's episode.
Yeah, Mike, the market had a pretty crazy week last week. We had a bunch of big events, and the market was swinging all over the place. Look at all that chop that came in. It was like a heartbeat monitor, like we were on the middle of the ocean last week with all that choppiness there. Now, the SPY is actually running down, and it hit right off of the big support that we talked about at 444. Now, give or take about $1 on this one, it actually fell down to around like 443.40 before popping back. But that was a great move down to that support. 444 is a huge level, and I know, Mike, we talked about this a lot on Thursday night, and we bounced right off of it, and we're heading back up. So for this week, I'm going to be watching this 444 area so closely. I think it's crucial, especially with the earnings and everything like that coming out. And if we end up dropping under this, I'll definitely be eyeing up more puts for next week. But I'll be honest, Mike, I could see a day or two of uptrend coming in. We've been seeing so much selling pressure lately. I could see like just a slight pop up to retest maybe 450 or 452 before more selling pressure, but that support is going to be crucial to watch this week.
No doubt about that. And on Friday, the market actually made a new monthly low, and the market's been selling off in a way that we honestly just haven't seen in a while. So, this week is going to be exciting because we're coming up to that very important support level right around 444. And, it's kind of do or die, and the market volatility is heating up more and more by the day. So great stuff there, Tom. But while the volatility is increasing, we also have some decently exciting earnings. It's nowhere near as exciting as we've been spoiled with over the past couple weeks with all the big tech stocks, but we still do have a couple big names like Walmart on Thursday before open. We got like Target Wednesday before open, Home Depot Tuesday before open, and a couple other ones sprinkled in, but not bad.
Yeah, it's really not. It's a pretty good week for earnings, and it's not like the big names. Like, we're not going to see Apple or Tesla or anything like that, but some of these stocks can have pretty big moves, like Cisco, for example. I could see them having a pretty decent move, or TCEHY, Tencent. That one's a little bit of like an outlier down there in the China sector. Keep an eye on Tencent. They're pretty big in a bunch of different industries there, but I'm really happy to see these earnings, Mike. Walmart, Target, I know they're not very exciting, but they will be fun, even Home Depot should be pretty good. So like you said, it's not the craziest earnings week that we've had, but these stocks do have good moves. And like if we go over to like a chart of Home Depot, man, they have been recovering up so much lately. If these earnings go well and they end up pushing up above like 335, they'll be getting really close to breaking out back up to 350 plus again.
Uh-oh. Yeah, it's interesting because we're seeing some stocks, like let's say Home Depot, holding up just fine, where some of these other stocks that have just been rocketing over like the past year are starting to pull back. And a lot of them are these big tech stocks, like even Apple. How often do you see Apple have a down streak like the one we're in right now? And the answer to that is not too often. So we'll see what happens, but it's pretty clear that bears have been in control lately, and unless the market can kind of like step in and change things, this sell-off can continue. So we'll see what happens, and of course stick with us because we have a lot more analysis and setups and all that good stuff that we're watching. But Tom, one thing that I cannot ignore is the volatility that we're seeing in the market right now. So looking at this chart right here, we could see that the volatility in the S&P 500 has almost doubled over the past couple of weeks. Look at that. Like when you see volatility increases like that, obviously you can just see it in the market, but you could also feel it in the options. Like when volatility increases, a lot of times when it's starting to increase like we're seeing now, that's when you see some of the best opportunities in the options market, because the options market is so used to like, up or down moves of like, 0.5%. And then when you start to get those up or down moves of, 1% or more, that's when you see options go, 800% plus. So we'll see what happens. But hey, I think it's a really good thing, especially for short-term traders, to see that volatility on the up and up.
Yeah, it's really good. And, if we even go to a chart of VIX here, it started to pop up a lot last week. Now, I know the VIX did start to come back down a little bit on Friday, but overall, at least we're getting off of that like 13 to 1350 area, and we're up above 14 again. So as long as the market like continues to go down here, we should see VIX still continue to go crazy. And I'm not saying the VIX is going to like explode all the way back up to like 25 or 30 or anything like that, but I could see in the short term like maybe a test of like 19 or 20 here on the actual VIX index itself. So I'll keep that on the radar, Mike. And it's good to see volatility increasing, in my opinion. And we've even been seeing the bots take advantage of this in Discord too. Like last week was an amazing week for the bots. A lot of great plays like on NVIDIA puts, even just a lot of puts in general. It was a great week for puts, unless you're trading like UVXY, then calls were pretty good. And I will say, Mike, we also can't sleep on these ETFs this week, like SQQQ, UVXY, SPXS. These stocks have been doing great lately, and to be fair, they've been kind of like holding up my account in a pretty good way while all these stocks are pulling back.
Beautiful. Yeah, I'm loving this short-term volatility, and I think it's awesome for multiple reasons. One, you get like better trade setups in the short term, but two, a lot of times, even though the longer-term stocks might dip down a little bit more, it also presents a better buying opportunity to just increase that position more and more for when things eventually do recover. Your account will look better than ever before. So great stuff there, but on a somewhat more bearish/warning side of things, we do have some insider trading data here that isn't looking the best, to be honest. So basically, the ratio of corporate insiders buying versus selling fell to its lowest level since April 2021. So it's not good at all. We can see that while the selling pressure, which is like the orange level, like, kind of like underneath zero, is, somewhat normal. What is not normal at all is the amount of buying pressure, which is kind of scary because even the people at these companies, that know more than basically anyone else should, they are not buying. Really, they're not. Like, if you look over the past, over 3 years, basically every other month has seen more buying pressure than we're seeing right now. So take this as a warning sign. Even the insiders are like, you know what? This market's getting a little bit whack. Maybe I'll step to the side for a second.
Yeah, I mean, that is a very low number there on the buy side. So I definitely am worried about that too, Mike. And, that ratio here is definitely like the lowest one in a while. There's been a few times where like they've gotten pretty close, but there was just a little bit more buyers than there is at the time. So it makes sense, Mike. And what else that I also found interesting on this is that every time that we see like a good dip down, like kind of like we did recently, where we have like a big green candle of buyers and then it starts to get low, once it gets that low reading, it usually starts to pop up for the next couple months, which I found interesting too. So maybe we'll start to pop up here a little bit more on the buyers, but every economic situation's different. Maybe it won't pop up, and if it doesn't, that would be even more worrying.
True, that would be very worrying. So with that being said, Tom, let's get right into the fun stuff for tomorrow, and that is some, potential trade setups. So the first one I'm watching is Netflix, and it's actually to the downside. So Netflix has been an absolute beast over the past year, but now it's starting to cool down a little bit, and this is only normal, especially when you have tech stocks falling as well. And they're coming very close to a support level right around $420 a share. Right now, the stock's just under $422. If we see like a nice clean break right below $420 and like the market itself is selling off too, I think this can make for a pretty awesome downside play.
I do too. I think Netflix could be awesome to the downside. I like that 420 level. It's Elon's favorite number, and Netflix has also been stuck up here in the top for a while, and they keep rejecting around that 442 to 440-ish area. So I'll keep watching it too, Mike. I think there could be a pretty good pullback to like 415, if not even less, if there's a pretty bad drop down. And I'm actually watching a credit card company to the downside, believe it or not, and it's Visa. So they've been kind of double topping here, having a bit of a lower high, hitting that 240 244 resistance lately. If they end up falling under 238.50 this week, I will be looking more at puts. I think that they could still come down here, and they started to kind of come back a little bit last week, but I think that as we go forward here, they'll start to dip off a little bit more, especially as that selling pressure hits the market, and maybe even as some of these banks start to turn around as well. I know that these banks have been kind of pulling back a little bit lately too, so I'll keep my eyes on them for more selling pressures as well.
All righty, good stuff. So while tech stocks have been struggling a decent amount lately, some energy stocks have been doing very great in the short term, and especially on Friday. So whether you're looking at OXY, ExxonMobil, which is XOM, or even Chevron, which is CVX, they had a great day on Friday. And for tomorrow, I am going to have a very close eye on OXY. Energy is seeing some great inflows in the short term, and this stock normally does run in like a pretty good way. It's also pretty liquid and easy to trade as well. It's just under that $66 level. We have resistance right around 68 and then like 70 as well. So I'm going to have this one on close watch to the upside.
Yeah, I like it. Oil's been really starting to fly up a lot lately, more than I think people realize. It's been going a little bit under the radar, and I know a lot of people have been trying to look at, Oxy, ZOM, stocks like that, and they were saying, oh my gosh, Tom, that stock's going to be down at $40 or lower here sometime soon, but it just keeps going up, and oil prices are holding their ground. So as long as this keeps happening, I think that these energy stocks could surprise people. I love them, Mike, and it's kind of like CCJ too. Look at that stock, almost running up to new highs too. I know it's not oil, but very, very close. And talking about oil, and I know this stock isn't necessarily an oil stock by any means, but it's Boeing, right? And they use a lot of jet fuel and stuff like that with their planes. I'm actually watching for Boeing to the downside here. If they fall under 235, I'll be watching for puts. It's pretty much like the low of Friday, and it's a pretty big area of support. So if they break under there, maybe target 230 to the downside. And then if we break 230, you could target even lower. But this is a pretty big double top going on, and Boeing is pretty overbought here, at least in the short term. And if we go over to the book map, the reason that those areas are so specific for me is that we've been hitting off this big 240 resistance lately. And look at that stack of sellers coming in on the book map at 240. I love to see that. And you can see the buyers down here at 235. So that should be a pretty decent support. If we get under there, definitely target maybe for a day trade down to 234. I know it's only 1 point, but those options should get pretty good moves down to there. And then if we break under 234, target 230 under that. But it's good to see those buyers there at 235. It shows it's a pretty significant area, and that's really what I love Bookmap for, is finding those big areas and trying to identify those bounces and where we're going to get those big breaks.
All righty, good stuff. So if you guys want to try Bookmap, aka X-Ray Vision for stocks, check out that first link in the description in the comments down below. We have a pretty nice deal with them, so definitely check it out. But Tom, it's now time to crack right into those momentum plays, and with the first one, we have Chevron to the upside.
CVX, if they break above 165, go ahead and look at calls. They're in that oil sector, so they could go pretty crazy if oil starts popping.
Sounds good. With the next one, we have CCJ also to the upside.
Yeah, I love this stock lately. If they break above $35.10, go ahead and look at some calls.
And with the last one, we have the powerhouse Google to the downside.
GOOGL, Google, Mike. There's also Goog if anyone wants to check that out. But with Google, if they break under 129, go ahead and eye up those puts. They're just under 130. And man, Mike, these tech stocks are so overextended right now. If they start falling down, we could see some pretty good put opportunities. And we saw that a lot last week.
No doubt about that. So we have that downside level on Google. If it breaks below that, we're watching it for puts. And then don't forget about the upside levels on CCJ and then Chevron, which is CVX. If they break above those levels, we are watching them for calls. But it is now time for the big money $855,000 trade of the day, and we are looking at ABCM. So a lot of you guys probably hear this ticker and you're like, what is that? Never heard of it. And my answer to that is exactly, seriously. So looking at ABCM, basically on Friday, it's a little bit complicated, but I'm going to simplify it in a nice and easy way. Essentially, someone bought the 25 strike calls and then shorted the 30 strike calls. This is called the call debit spread. Long story short, they want this stock to go up, and they put around $855,000 into this trade. In a perfect world, they want this stock at or above $30 by September 15th of 2023. Looking at the setup, it's not bad. It had an awesome day on Friday. It's in the middle of a great uptrend as well, so it's not a bad setup at all. And yeah, I figured I'd point it out because whenever someone dumps $855,000 into a trade like this, it's certainly not random. I'll say that.
Yeah, and it's a pretty low price stock, and I love the moves this thing has. Like 3.6%. That's a pretty good move out there. So I'm sure that those options are doing well. And off of this recent dip, it's been dipping down pretty well. We just got that first big green candle coming back in. Like if we're starting to go back on a good uptrend here, this could be a good entry if we see like a breakout start to happen this week. So I do like it, Mike, and it is a little shorter term as well, expiring in about a month. So I do like that. It's a bullish play. You could just go for straight calls if you wanted to, like maybe the 20 strike or the 22 strikes, just depending on what you're looking at or how your risk tolerance is. But I do like it, Mike, and it's definitely a crazy stock as far as these moves go. Like that recovery this year is nuts. It's not up like, 100%. Well, it is up 100% plus, but you know how there's stocks like Nvidia and stuff like that going. The movement was just so straight up. It's just like it looks kind of like a penny stock or something.
And that's not bad for like big money trades because a lot of times it's easier to follow like the manipulation or like the big money, flow with these stocks that aren't necessarily like powerhouses like Apple, because when you're trading Apple, you have hedge funds, institutions, different traders all around the entire world all trading at the same time, and it gets kind of hard to, follow the specific flow. But like sometimes with these smaller name or less traded stocks, it's a lot easier to follow the whales, if that makes sense, because they just stick out so much. So either way, keep a very close eye on this one. It's not a bad setup, and it had an awesome day on Friday. But Tom, I think this week should be a pretty good one. Whether it is to the upside or the downside, that's totally fine. We've seen a lot of bearish/downside movement lately, and we know a bunch of people that have capitalized off of it in a pretty awesome way. Basically, when the market's falling, there's a lot of ways to play it. Of course, you can short stocks, you can buy puts, you could also trade inverse ETFs like SPXS or SQQQ or many other things like that. And I think either way, what excites me the most, Tom, is if we go back to that volatility chart. Basically, we are seeing volatility increase a lot over the past couple of weeks, and this really isn't something that we've seen in a while. So this really excites me, and I think it should excite every single short-term trader out there, because this is almost exactly what you want to see. The more volatile it is, the better moves you see, and the more those options premiums just run. So I'm pretty pumped up.
Yeah, and I know, the past couple weeks we've been seeing a lot of movement based off of stuff like data, like CPI data, big earnings, stuff like that, right? We're starting to get to the time where there's not as much on the economic calendar side of things either. Like we have retail sales on Tuesday. On Wednesday, we do have the FOMC minutes and then like building permits. But besides that, there's really not much on the schedule for this week besides like existing home sales. So I like that, Mike, for the reason that we could just focus more on the price action, focus more on these big breakouts and these big breaks to the downside, and start to try to capitalize more on that price action than have to worry about, well, hey, I'm not going to enter this play because there's Apple earnings tonight, stuff like that. So I'm glad that we don't have to worry about that stuff as much this week, and it should make for some good price action, some good opportunities out there. Just watch that support on SPY. We've been watching 444 for a long time. I'm hoping that we break under this, Mike, but I wouldn't be surprised if we held it for a couple days.
There we go. And, whether this month has been awesome for you or absolutely horrible for you, I don't care. Go into the market this week with your head up high. Of course, have a disciplined approach, and let's have a great week. I'll leave it at that. Let's have a great week. Volatility is increasing. There aren't too many crazy economic events, so this week should be a good one. If for some reason you guys are new to the channel and you're not already subscribed, join the community. Absolutely demolish that subscribe button. Join the community. We really have an awesome one, and you'll see our videos recommended to you more more often. But last but not least, we want to give a giant shout out to today's member of the day, MFD9534 on YouTube. Thank you so much for the kind words and support. We really appreciate you. And besides that, let's have an awesome week in the markets.